Okay, we are probably moving into a very, very popular video that we're about to do right now with justifiable reason. The reason is because we're talking about funded accounts. Now, funded accounts and prop firms and all that is basically where we can take all of the stuff that we've learned in trading, put it all together. We've proven to ourselves that we can make money with our small capital, with our $100 accounts, with this, that. Now, we put it into this as an investment into ourselves, and this is where we can start to look to potentially start making some big boy money, right? That is, of course, the goal of prop firms. That is why we as traders like to trade with them. Does that mean that every single person makes money with prop firms? No, absolutely not. But we're pretty well going to cover all of that in this episode. Do I call them episodes? I don't even know. But in this thing, we're going to basically try and cover as much as we can. So without further ado, let's just get straight into it. So real quick, for anyone that does not know what the heck a funded account is, what a prop firm is, it's basically a company who offers traders like yourself, like me, large sums of capital. But do you just get given the large sum of capital? No. You need to get evaluated and prove to the company that yes, you do know how to trade, you can trade, and they will give you access to that capital to trade with. I say it like this because it's not actually the real money. It's all technically on demo account, but the payouts that you can receive once you get a full live account with the prop firm is 100% real. So basically, every single prop firm does have a set of challenges that they need to evaluate you with as a trader to then be able to pass and have access to the account. And there is loads and loads of prop firms out there. Obviously, at the same time, when there's a lot of things coming out around that subject, there's bound to be some dodgy ones, right? So there is, of course, going to be a few scams everywhere. And we don't want to be victim of those prop firms. I've seen it done with my friend even. I've seen it done with a lot of people, of course, having accounts with other companies, putting some money in to then get the account. And then, unfortunately, stuff goes wrong. They blow it. No, the company goes down and they don't get their money back, or they don't receive payouts, or this, that, the other, right? It's not very nice. So how can we avoid that? Well, there's this little website called Prop Firm Match. So basically, Prop Firm Match has a bunch of prop firms in it. This is what it looks like from the top. And you can compare a whole bunch of prop firms together. They also give you all of these offers as well. So for here, Blue Guardian, they have a 30.5%. That's a bit weird, but 30.5% off for a code, whatever. Basically, they show you a bunch of offers that they have for whatever month it is. So obviously, I have the May offers because it is May when I'm filming this. But if you scroll down, you can see that on the left here, there is a bunch of prop firms. We've got Funding Pips, Breakout, Fivers, Blueberry Funded, Alpha Capital, FTMO, right? What we can do is, of course, find a prop firm. Maybe you've heard of a prop firm, Alpha Capital, Alpha Capital, Alpha Capital. Oh my God. Alpha Capital will be one of the prop firms. I'm leaving that in. That was funny as. Alpha Capital will be one of the prop firms that you would have heard of if you've been following me for a long time, because they are the company that I'm currently funded with. So if we were to review Alpha Capital, oh, I can't do it. That's crazy. There is 670 reviews with a 4.4 star rating, right? Very, very nice. Then it shows what country the company is based in. So this one is, of course, in the UK. And then years in operation. This has been in 3 years of operation. They have max allocation over here, 400k per trader. They have a promo at the moment, and then they've got actions, and they've got all these platforms, which is what you can trade on with them. So this is MetaTrader, this is DXTrade, and I'm not even sure what that one is, but that's another platform that you can trade on, right? So basically, you can just scroll down and you'll be able to review a whole bunch of different prop firms, and this way, hopefully, you should be able to identify the ones that are reliable and the ones that look a little bit dodgy. So FTMO, for example, surely you've heard of that if you've been searching for prop firms. 10 plus years in the business. They are basically the prop firm that started all prop firms. Like that's what you think of when you think of them. The other prop firms I'm not too sure on, so I'm not going to be talking about them. But I'm currently funded with Alpha Capital. Oh, why can't I say capital? I'm currently funded with Alpha Capital. So basically for this next part, we'll use Alpha Capital to run through basically what an actual prop firm and the challenges look like. Okay, so this is what Alpha Capital's website looks like when you jump on and look to take a potential evaluation, right? So pretty much if we scroll down, ignore this stuff, scroll down to here where it says become an alpha trader. Wait, no, that's how we're buying an account. Up here is what I wanted to show you actually. Up here is where we can see the different rules. So each prop firm, of course, like I said, has rules. So let's set this up again. 2-step, 8% and $50,000. Okay. Step 1, the first phase. So basically you'll be given an account with, we have $50,000 in it. You will then need to trade that account and make a certain amount of profit in the first step. If you do that, congratulations, you pass on to phase 2. If you do it again in phase 2, congratulations, you are now a qualified, certified funded trader. And at that point, you can then request payouts with whatever profits you're making. But of course, firstly, step 1 is where we have to start. The leverage, we don't need to worry about the leverage. There's not much we can do about it. The simulated profit target is 8% for step 1. So for a $50,000 account, that is $4,000 in profit to make 8%. The max simulated drawdown, which is the most that you can jump, basically the most that you can lose, is 8% as well. So $4,000 is the max that you can lose. You then have the max daily drawdown, which is 4%, which if you're following any of the risk managements that we've been talking about, you should not hit that. The max simulated trading days is unlimited. You have unlimited days. There used to be prop firms, well, there used to be a rule for like all prop firms where you had 30 days to pass an account or something like that. It's gotten a little bit easier when they've gotten rid of that, but yeah. And then an analyst performance fee, they have NA, but at qualified, you can see it says 80%. We'll get into that in a sec. So step 1, you need to make 8% without losing 8%. Seem fair enough? Cool. Step 2 is you then need to only make 5% and then not lose 8% again or 4% in max daily drawdown. What happens if you reach the max simulated drawdown of that 8% or the 4% before you even pass an account? If you are trading with a $50,000 account and you are finding that you only have $1,000 left before you are at that $4,000 limit, the 8% drawdown, well, that's a tough spot to be in, but it does happen pretty well to every single trader. But if you are to reach that max drawdown of 8%, your account will be terminated and you will fail the challenge. What happens when you fail it? They take the account away from you. You will no longer be able to trade it, and you obviously lose the money that you put in to pay for the challenge as well. So you don't want to be losing it, and at the same time, we do have to pay real money to be taking one of these challenges. And so what I would say is that make sure 100% you have proven to yourself that you know how to trade your strategy through emotions, through rough market conditions, everything, right? You need to prove to yourself that you can trade it before you look to do this, because this is where it becomes real, okay? And this is where a lot of people can think that they're ready, and then they hit the prop firms and they start blowing a prop firm or 1 or 2 accounts, and then it starts to spiral them and they go down, right? We ideally don't want that to happen to you. But if you were to hit 8% drawdown, they will take away the account. Again, if you were to hit 4% drawdown in a single day, which is either through overtrading or over risking, which we should not be doing, hopefully, if you've been watching the rest of these videos, then they will also take away the account. So you will not be able to trade with the account anymore. But if you make 8% on the first step, you then only have to make 5% on the second step, and then you are qualified trader. Again, they do still keep the max simulated drawdown, which is of 8%. That is still going to be there the entire time. There is also the max daily drawdown of 4%. Those two, you basically just need to prove that you have risk management and you're not going to be losing too many trades in a row that blow the account. And then the simulated trading days, NA, because it's, a live account. And then the analyst performance fee, 80%. We are the analyst, right? We are trader analysts, and 80% is what we can request as a withdrawal is 80% of the profits we make. So say we've made $10,000 profit, we want to withdraw that by the withdrawal date, the payout date. We get 80% of that, being $8,000, and the prop firm keeps the other $2,000, and your account gets reset back to the start for those next trading days. That's basically how it works. Now that probably was a little bit long, a little bit boring. I do apologize, but the main reason you may have clicked on the video is to figure out actually how do we pass a funded account. We may know what a funded account is. I have to explain it anyway, but how do we actually go about passing a funded account? Well, for me, the way that I look to pass a funded account, okay, is the profit target is 8% for step one. So for step one, I'm risking 2% of my account, which the max daily drawdown, no, the max simulated drawdown is 8%. It used to be 10% when I actually passed my account. But anyway, it says 8% now, which means for my 2% risk, I would need 4 losers in a row to then be wiped out. Of course, though, I'm aiming for a 1 to 2. So my 2% risk gives me a 4% reward. So what does that mean? That means in 2 winning days, I will have 8% and passed the first phase. That means the first 2 days of my prop firm trading career, if I get 2 wins in a row, boom, step 1 is passed. Similarly, again, in step 2, I would still be risking 2%. This is just me, but I would be risking 2%. That way, if my first trade, this is actually what happened, but if my first trade is a winner at 2% risk with a 1 to 2 reward, that gives me 4% as the reward. The 5% target is only 1% away then. If my first trade with a 4% return on step 2 is a winner, then I'm obviously up 4% and I need to make 5. Then the next few days, I will de-risk myself and put myself in a position where I can then have, is it 3 or 4? I think it's 4 trading days after that to potentially pass the evaluation. Let me break it down over here. I'm going to break it down, right? So we need to get to 5% is the goal for this. What are we looking to do? We take a 2% risk and get a 4% win. That puts us at 4%. Yeah, makes sense. Let me get rid of this actually. Make it a little bit neater, right? 4% win with the 5% goal. That's what we're at. We then only need 1%. So from there, wait, what is that? That's not meant to be 5. It's meant to be percent. From there, we would then risk 0.5% risk. And then let's say it's a loss. That puts us at 3.5%. Okay? If the first trading day is a win, I'm de-risking the hell out of my thing. That puts us at 3.5 if we take a loss. If we then take a loss, we risk 1%. And if we were to lose that, that would put us back at 2.5%. In order to make 2.5%, we can then risk the next day technically 1.25, but 1.5% risk. And then if that was to lose again, we would be at 1%. Then for the 4th trading day, 2% risk either gets you back up to a 5% win, which passes the account, or you're down 1%, right? We can be in drawdown, but basically what I'm trying to say is that breaking it down with risk management, this is the goal. 5% is the goal for phase 2. 2% risk on day 1. If it was to be a winner. Now, don't put too much pressure on it because we still can just trade the way we normally trade anyway. But if your first trade on a 2% winner is a win, then you're already up 4%. And with that 4%, you can then de-risk yourself and give yourself 4 trading days to pass the account. Just a quick side note here. Basically, I didn't explain that too good, but every single day that I'm de-risking myself, so with that 0.5% risk from 4%, the 1 to 2 win is still enough to pass. If I was to lose, I'd be at 3.5% in profit. The 1% risk would then give me a 2% winner, which would be then enough to pass. Or if it was to lose, it'd be at 2.5%, 1.5% risk with a 1 to 2 winner is 3%. So again, that would pass. So basically each tier of that, the risk that I'm doing with the 1 to 2 is enough to pass at the same time. It's not just de-risking so that I don't lose as much going down. It's so that each of those days can either pass or give me an opportunity to pass the next day. I don't think I really explained that too good, but that's what I was trying to get at, right? That's with a 1 to 2. Obviously, with your strategy is going to be a bit different, so you got to work it out. But yeah, quick side note there. I didn't really explain that, figured it out while I was editing, which is exactly what happened to me. Thankfully, the second day ended up being a win as well. So I passed within 2 days. You do need to have a third trading day. I'm not sure if that is just Alpha Capital that have that sort of ruling, but there is some prop firms that do say that you need a certain amount of days before you can actually pass or request payouts and stuff like that. So 3 trading days was what I needed. So my first day was a 2% winner, 4% up. My next day put me up to the 5% goal. And then the third day was just a day to trade. So I literally risked like $1. But anyway, this is what I would do with my risk management, right? Because risk management is so important. We need to understand that in the long term, we need consistent risk. But passing a prop firm challenge can be done really, really quick and with a pretty good like opportunity as well. With the first day being a winner, you then get 4 days of potentially passing the account. Now, is it possible to take 4 losses in a row? Yeah, it is. But that's why we should have been doing our back testing and all of that. And we would know our win rate, our percentages, all of that stuff. And then with the 4 days, it's pretty good odds that you're going to get a winner within those next 4 days, right? But only if you follow your plan and follow the market and don't make mistakes. You can't be making mistakes. This is in terms of optimal execution, right? This is optimal execution. Then, if we were to pass the account, and you have an 8% drawdown, because we're not going to blow the daily drawdown because we're better traders than that. That means at 2% risk, you get 4 losses in a row. At 1% risk, you get 8 losses in a row. At 0.5% risk, you get, 16 losses in a row? Is that math right? I don't even know if that math is right. Is that how you spell losses? This is sending me now. But think of this. That's the max drawdown you can have, 8%. Would you risk 2% of the account to potentially take 4 losses in a row and blow the account? Or would you de-risk yourself, take a pay cut, and have 1% risk and then take 8 losses in a row? Are you going to be taking 8 losses in a row? You'd probably hope not, right? Unless your win rate is pretty low, then obviously you could, but you'd hope not. 0.5% risk even is crazy amount. If we were to, hang on, let's get this up, all right? Let's bring this back over. If we were to go with a 50, oh wait, we don't need this. Sorry, we don't need this. We're better than this. Hold up. Let's get this calculator going, right? If we were to have a $50,000 account and de-risk ourselves to 1%, 0.01, that equals $500. Now remember, this is US as well, so you got to convert it unless you're in the US. But $500 risk, and obviously we're targeting 1 to 2s, so times that by 2, boom, $1,000 for the day. Is that? Are you telling me that you're making more than $1,000 in a day if you're young or if you're in a job at Macca's or something like that? No. So why would you try and double that with your 2% risk, which obviously would be $2,000 a day, which I'm not saying you can't do, but you can do it, but it's obviously riskier. Why would you be riskier? If you want, at the same time as well, I'll say this, your first payout, you also get the evaluation fee paid back to you at the same time on top of the payout. So you can make that $1,000 and then say it costs, what did it cost for the 50K? Like $400 something. You can get all that back, reinvest that $400 into another account. What can you do with the other account? Pass it, trade it, boom, now you have 2 accounts for $100K. Now you're making $100K, 1% on $100K is $10K. No, it's not. It's $1K. What? Hold up. It's 1,000. That's what I said. That's what we're looking at. But where was I going with this? And then obviously your winner is a 1 to 2, at least for the way I do it, $2,000. There you go. Basically, what I was trying to say is prop firms are not going to last forever, especially like funded accounts, right? Not in terms of the companies, but in terms of you actually trading them. You are probably bound to lose them. There is rules set in place that should have you lose your prop firm account, your funded account. We want to minimize our risk in a way that allows us to keep hold of our account for as long as possible while also capitalizing on the opportunity, right? But this is where it becomes individual and like set to you. You got to figure out your percentages, what your drawdown is and what your win rate is. Maybe you're targeting 1 to 4, so you may as well just risk 0.5% because you're not going to be losing 8% at a 0.5% with 1 to 4s and take 16 losses in a row and not be up. Or maybe you are, right? Who the hell knows what the market's going to do? Nobody. But this is where you got to work out that sort of thing. But for me, it would be 2% risk through the phases, because look, the money that you put into the account to actually take the challenge, you got to think that that's already gone and that's just an investment, which it is. It's an investment within yourself. And then it's up to you to trade properly. But with that trading, I mean, personally, I wouldn't be risking 0.5% to then try and make 8% on the prop firm, because that is a long time that it would take. But who knows? Maybe that's a smart way to do it, and you end up not blowing an account, and it just takes you a little bit longer. Who knows? Who am I to say the way you should do it? This is just the way that I do it. I do 2% through the challenges, and then I look to de-risk to try and keep a hold of the account a little bit longer. And then that's just obviously based on my strategy, based on the win rate at the same time. Stuff like that. I know that at 2% risk, I can take 5 losses in a row. I did it last week, right? That would blow the account. Thankfully, it was like switching over and resetting me when I was passing the account, so it didn't actually end up affecting me too badly. But still, that's what I would look at. And then at the same time, look, a piece of advice here, that if you knew that 100% you were going to pass the account that you're doing right now, 100% you were going to pass it, but it would take you 3 months. 3 months to pass it, but you knew 100% you would pass it. You wouldn't blow it and have to rebuy more accounts and more accounts. 100% you were going to pass this account that you have or are going to get, but it would take 3 months. Would you be rushing to pass the account? Would you be panicking over every single trade, every single loss that you're taking, every single win? Would you be feeling all of that stuff if you knew, I'm buying this January and by April I'll have it passed? No, you wouldn't care, because you knew that it was coming. So look at it like that. Who cares if it takes you a little bit longer? There is no rush. Like, I'm filming this in May. We still have so much more of the year. We still have over half of the year left. If it takes you half what's left to then pass the account, you then have the other half to potentially keep a hold of it and make a couple of payouts. There you go. You get a good Christmas out of that. But yeah, don't be rushing the process, and then don't be looking short term either. I'm not sure if I said this in one of my videos either, but actually I think I said it in the last video. But yeah, don't be looking short term. We got to expand what we're looking at. All right, we live in the moment, so we're going to be taking a loss on a daily, and it's going to hurt for that day. But the entire week, the entire month could be up. You got to look at things like that. It's very hard. That is the hardest part of trading. That's why it's so mindset focused, is because you experience stuff on the daily, but your reward comes on a larger time frame. So it's very out of the norm, I guess you could say. But yeah, I think I'm sort of rambling at the minute. I'm trying to think if there's anything else that I've got to really say. Do I encourage everyone to take a prop firm challenge? I would say it's very beneficial, but at the same time, make sure you're comfortable and ready to be taking the challenge. Don't just take it because you see everybody else taking it. You might not be up to that phase yet. You might not feel ready, or you might not have the money to actually purchase an account, because some of these accounts are expensive, especially if you're going for the bigger ones. They are a proper investment, right? So make sure that you're fully confident and fully prepared, and you've been doing enough back testing. You have enough data behind you to back your reasonings, and make sure that you've, again, had enough live market experience as well with a smaller account. That's probably what I would recommend. Make sure you've got enough live market experience with a smaller account to sort of manage your emotions with all of that sort of stuff. But I believe that will be all that I have to say. This is a pretty long video. I do apologize, but I think I've covered everything in terms of the prop firms and trading and stuff like that. So I'm not sure what's next. I'm not sure if there's going to be another video. They're probably going to be a bit more spread out at this point, when the ideas come to me and stuff like that. But that's prop firms. So have a look in, rewatch the video, rewatch the important parts of the video, and hopefully this helped. And hopefully with your next prop firm, you'll be passing it, even if it takes 3 months, because it doesn't matter. All right? You're already profitable. You know you can do it. Just relax. Tranquilo. Relax.